Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash-flowing properties in today's market. Here's your host, Gabe Peterson.
All right, we are back with another episode of the Real Estate Investing Club. I hope you guys are having a great day, a great week, wherever you are and whatever day it is for you. As always, bringing that nice Friday energy to you. It is a beautiful, slightly cloudy day here in Seattle, which is to be expected, December 19th. Christmas is right around the corner. And man, my daughter, she's 2, almost 3 years old. She is stoked, which makes me even more stoked. I love Christmas to begin with, but having a little one in the house who loves it like 10 times more than an adult could ever love Christmas makes Christmas pretty cool. So I'm in a good mood, and I'm in a good mood for a second reason, because we have Jonathan Tuttle with us on the show today. Jonathan is from Midwest Park Capital, and they do flex office / industrial space development, as well as mobile home parks, which you guys know is one of my favorites. So this should be a good conversation. Jonathan, thanks for hopping on the show.
Yeah, thanks for having me on. Excited to be here.
Absolutely. I told you before we got on here, we always like to start with stories. We like to hear how people got to where they are. So why don't you take us to the beginning of your story in real estate and tell us how you got here?
Sure. Yeah. My dad was a developer, single family homes, discovered the mobile home park space in 2006. And he did every type of asset class, like from golf courses, bowling alleys on the commercial side, multifamily, which those first two are not good, by the way. And then
bowling alleys,
and then this is right before, obviously, the downturn, and that was the best performing asset. And so after I saw that, and I remember every other real estate was having such a terrible time, and valuations, and our parks went up. We were raising rents, and we had a waiting list because people were downsizing. I was like, okay, there's an asset class I could really get into. And I always like to do the niches where it's like a little bit less popular. There's always more opportunity when it's less saturated. So coming from my dad's background, then got on the brokerage side, and now I just do the investment side for the last 8 years.
Nice. So you guys started in, you said golf courses and bowling alleys. That was
some of the asset classes. Yeah, he tried everything, and that was the ones. I just say that because it's just a unique story, but he wasn't even a golfer.
just had it.
He just thought but it wasn't. There's actually one of the worst.
One of my friends' family had a golf course, and they were just always talking about how hard it is to actually run a golf course.
It's a business.
And you never really think about it because, I mean, when you're on the green, that grass is like a quarter inch, and you gotta. People, if the green isn't nice, people are not going to come to your place, and I'm sure that the maintenance of just the green itself has to be a nightmare. So that makes sense why you'd switch to mobile home parks. A little bit easier. Right on. Well, sweet. So you got started. Your family was in real estate, and you hit the bug when it came to mobile home parks. It kind of fit the criteria that you were looking for. Take us to that first deal that you personally took down. What was it, and what were the big aha moments that you got from it?
Yeah, so I would say I'll do the second one because that one's a little more recent, but it's been a while. 2013, we found a park. We just sold the other one about a year before, and we didn't do a 1031. We wanted to actually find like a quality park because it was still kind of scarce in that time to find deals. Now it's even harder, as you know. But we found a park that was mostly seniors. And the cool thing is at that time, just like how self-storage is now, or what self-storage was 10 years ago, mobile home parks were like 10 years ago, it wasn't as institutional as scooped up at that time. So you could basically find deals with local, and the big brokerages weren't really into it yet. And they were just starting to get dabbled into a little bit. So we were able to it wasn't like a super competitive, there's like 2 bids. That same deal now, when we sell it, we end up taking it down, but there'll be obviously significantly more people putting offers onto it. But at that time, it wasn't very competitive because people didn't know about it. It was still kind of like niche and cliche. But it was just a quality park. It was a senior focused park, mostly occupied. The value add for us is it was just like with most mobile home parks, as you know, it's mom and pop owner. Hadn't raised rents in like, it was like the ones you always talk, when people talk about the stories, this is that story because that's how it
Yep.
was. It was just the rents haven't been raised in like 10 years. They weren't like, they didn't even have a website. They didn't even have, everything was just so mom and pop. If you
Yeah.
follow the
It
mobile
was
park industry,
exactly
like, you
what
didn't
you
have
would
to do
look for.
much. You just literally had to, here's the new rules and regs, like an actual sheet, just standard rules. Power wash the fronts up front. We added a rock garden up front. We had some capex, beautified the park, set the standard, kicked out the bad people, and then raised the rents. It's not even like to current rent. It was about $200 below what they should have been, and so we didn't do it immediately. We did it over, 20, $50 every couple of years, and so yeah, it was just a small park, 48 units. It's like 44 occupied. There's on the side. You could infill it, but there's not enough marketplace to infill it. But it has the padding, the electric, everything's already to go. For 10, we've been contemplating. Well, we're probably gonna sell it. I mentioned before the call with you, but the spring. But we could put in like a little self storage, or maybe like a little boat storage type thing with a little enclosure around it with gravel and fence. But I think we're just going to keep it there. But the value add really was like your investment dream, where it was like little to no work and just raise the rents and systems and beautifying the park. But those deals don't really happen anymore. Like,
yeah, I was going to say, I haven't, like one of my favorite deals, it was actually self-storage, but it was exactly that. This guy, he was, he didn't have it on Google. You couldn't find it anywhere.
Exactly.
He literally was just a sign on the side of the building, and he was taking, when I asked for his P&L and his rent roll and everything, he showed me literally pieces of paper.
Yeah.
And those deals are awesome, but I haven't seen anything like that in a while. And so now the value add, especially on mobile home side, the value add that I'm seeing, the only thing that's like legitimately value add, it all comes down to infill. Is that what you're kind of
turnaround parks? And those are a headache. Yeah. 100%.
Yeah. I haven't found anything where it's just, maybe their operations are bad. They're spending too much, whatever those, something that can be easily fixed has not crossed my desk in a while. So have you guys done infill? Is that a strategy that you pursued?
We did a little bit. The first park we did, we actually, and to your point, it's 100% correct data. Like we just said, it's like, it's almost impossible because now everyone got into it. It became podcasts like this. People start talking about it. Yeah. Internet blew up. Everyone knows about asset classes. They're the smallest asset classes. And like, so now even the brokers are telling the owners like, hey, raise the rents before you sell it. We'll get you an extra, $500,000, $1 million. So they're already, they're emailing them, calling them like, hey, let's raise it now. So when you sell it next year, like you had higher valuation. So those few and far between deals are gone. But the first one we had was a small park. Like I said, we bought in 2006. And that one, the cool thing about it was there was like a 550 unit park. That was like a 40 unit park.
Big.
So small. But a 550 park that was like 15 minutes away. The guy owned like the car dealership there. He owned a big multifamily property. He had like the biggest park in the area. Well, the cool thing is he didn't want the units. So some of the units, he said, as long as you haul it out, we had a collaboration. It's like, just pick them up.
Wow.
And so we got a couple, like 3 or 4 units, I forget exactly. And he just like handed it to us. He's like, as long as you transport it properly out of here, I don't care. I just want to get him out of here. Like he just had so much cash and he owned it outright. And so, the park was, I don't know how much it was probably worth like 20 million at that time. So he didn't care about, a $15,000 homes. He's like, just pick them up, transport them out. You guys could have them. And so we used that. We did some of the info like that way. So it was like 4 or 5 units that we had to infill, and 4 of them we got for that guy's park, and 1 we got somewhere else. That's the only infill we've really done. Usually what we do, our third park that we got, that was where we had to, and this is a park that's more of the homes are mostly pre-HUD or early 80s. Those we've had, I would say probably half the park we've done rehabs.
Yeah, we've done some rehabs, but I'm kind of coming around to the fact that I just need to get good at infill if I want to, keep doing deals. And it's actually, I've found it's more. I mean, it's always been difficult, but if you want to do it at scale, it is really difficult. Because unless you're buying new, completely new units and bringing them in. Doing this strategy where what I like to do is, bring something in and then rehab it and then sell it on contract. that
Yeah.
strategy at scale,
So hard.
you have to have an entire team dedicated to this in
Just
order to.
outreach. People actually do that. Some of the bigger operators have a person that goes on Craigslist and scours all day, and they have AI tools scouring Facebook Marketplace and AI, or especially Craigslist. They'll literally pay people like VAs to like, hey, look on here, find a deal.
Yeah.
Contact.
Yeah, we actually, side note, when AI came out, well, not AI in general, but AI, the like development AIs like Replit, Lovable, Bolt, those came out. I just had this idea to try to rank a website to, see if I could easily rank a website. So I bought sellmymobilehometoday.com and I just, put it through Replit and it ranked, and we're getting leads from people who want to sell their mobile home like consistently, and it was completely free. And I suggest anybody, if you guys want to try to rank things, you can rank it pretty easily. Well, at least it was easy for me in this one instance. I don't know if maybe it was a one-off thing, but it worked. The problem is you're getting leads from all over the country, and my parks aren't all over the country, and so you can't. I don't want to go through the hassle of trying to find a buyer for all these different mobile homes. But anyways, that was an aside. I just thought that was kind of interesting.
Yeah, transportation, that's the big thing, having reliable transporters, and that's the hard issue. So you could reflip the leads, though. Definitely could.
Yeah. That's another thing that I'd have to do, but maybe in another day. All right. So how about the future for you guys? I mean, you already mentioned Flex Office Space Development Fund. What's your guys' main focus in the next 1 to 2 years?
Definitely that niche flex space, like we were talking before the call, Texas, in between San Antonio and Austin. It's one of the highest. Okay. Well, Texas in general has like 8 or 9 of like fastest growing markets in the country. So you always want to go where the growth is happening, no state income tax, pro-business state. So all those factor into like a ripe environment to invest in. And there's just tremendous growth. In one of the markets we have, New Braunfels, it's got, I forgot how many, between 8 and 10 billion in development. There's national retailers. The state of Illinois, or not state of Texas, I'm sorry, is widening the road, the highway right there, the major highway, with like 3 billion in allocation there. And then there's also all these national retailers, 10,000 homes being developed right behind our parcel. So we just try to find really strategic places where the development makes just complete logical sense because of all the factors that you need to support developments there.
Yeah. And why Flex Industrial? What kind of brought you to that one?
Shortage of it. Like, it's specifically fun to do a product market fit for the market. And so high growth market, well, you need new HVAC people, need locations, plumbers need new locations. They're not going to drive all the way from Austin if they could put it right in New Braunfels, and there's going to be 10,000 homes. Well, they need a location right there. And there's only 4 flex spaces right now. And it's a fast project. Flex space is prefabricated metal. It's up in 6 months. So you're not like,
oh shit, really?
Yeah, it's prefabricated. So it's a very fast process. And it's already pre-leased. People are already excited because you put the signs up on a major highway that has 120,000 vehicles per day. And then right next to you have the big development. So it's just just everything aligns perfectly for just what a development should be. And it's a fast market. It's a fast mover, first mover is a market. And so flex space for the next 2 years, it'll be quick. And I think it'll get more saturated at that point. But right now it's underserved.
Are you guys entitling the land? Are you like changing the zoning, or how are you?
They're already approved. And specifically, Texas is, like I said, a pro-business state. We're getting parcels. Like the one parcel, this parcel we have a couple, but this one right there, the basic thing was the only thing you couldn't do to it was put in a strip club. We're like, we're not putting in a strip club. So we negotiated with the owner. We're like, well, that gives us less options so we could build for. And that's so funny. We got like a little like 200,000 discount because we used that as negotiation leverage. It was just because the owner wanted to move the property, but it was just funny.
That's funny. We're actually, I'm actively negotiating to buy a strip club because it is right in front of one of our self-storage facilities, and we're losing customers because of that strip club. And so we're trying to buy it from him to turn it into, we actually don't know what we're going to turn it into, but yeah, we're trying to buy it from him. And the guy, it's an interesting negotiation. I'll leave it at that.
I believe it. Yeah. Well, that guy was just like, okay, well, you really want the property. So
yeah, that's funny. So what's the footprint of I mean the flex industrial, like what's the footprint of the entire, the entire structure that you guys are building generally?
Sure. Like a little loophole is if it's under 12,000 square feet, you don't have to have sprinkler system.
Oh,
And
really?
so, and that, because the main thing with the sprinkler system, people don't know, you just have separate 12,000 foot buildings. And most people that move in are between three to six. So it makes it even just break it up easier. But the reason why is just to tap into a water main below is $200,000 or $300,000 plus the structure, to put it in. And then there's also like just issues. My partner had one of his before where the sprinkler system went off in the winter and like froze stuff by accident. And so it was a big insurance nightmare. So if you stay under 12,000 square feet, then you don't have to have the basically the sprinkler system. So that's kind of like how we do it. This project, we're looking at about 84. So seven buildings, maybe six. We're seeing how the market adapts with 6 to 7, 12,000 square foot buildings. If we have the six, we'll just add more parking, basically, depending on where the tenants come in.
And you mentioned you're pre-leasing these, right? Or how are you doing?
Yeah, we have like a big one of the big industrial leasing broker. The big thing is we have a big sign on the major highway, and then also we got picked up by local organic media, one of the big I forgot the name of the article, but like one of the big like online blogs, the market that talks about business and what's going on. And we had like a headline story recently, so that helped a lot.
Oh, that's cool. And I'm assuming most of your tenants are like HVAC guys, exactly. Contractors, whatever, those kind of guys filling it up.
Yep, exactly. People that want that. And what it is for people, for give clarity, it's basically 90% warehouse. Think of prime locations. They get the street visibility like retail. And then instead of having a secondary office, you could just build out 10% to the office. They could have a couple of their admin, people taking the calls, or if they want to have a little showroom. But 80 to 90% of it's typically just a warehouse component. And the best part about it is because of the zoning's pretty open in Texas, you could be on a major highway. And so you get that visibility, that traffic that normally industrial properties would be like hidden in the middle of nowhere. You get that major frontage and sign visibility, which helps them get new customers as well.
Nice. I like it. All right. Well, hey, I just took a peek at the clock. It looks like we have run it down. So it's time to jump into the quick question round. You ready?
Sure. Yep.
Let's do it. Starts with education. Could be any form. Could be a book you've read, a conference you've gone to, a mentorship program you've been a part of. But I need 2 recommendations, one for general life wisdom and then one for real estate.
Definitely Poor Charlie's Almanac. I think that's the best business book. It's like psychology of reading people, understanding people. It's very long. It's like 500-600 pages. I did the audiobook. But Warren Buffett.
That's Charlie Munger, right?
Yeah. Warren Buffett's partner. He passed away about a year ago. But just like that one's really good. Actually, that and Oren Clough, Pitch Anything. I think those 2 psychology books, especially because I work with a lot of high profile clients. Oren Clough teaches you how to talk to the people and the language patterns that resonate with them. And also they recognize you as a peer and not somebody that's selling them. So I think Oren Clough, Pitch Anything, and then Charlie Munger. Those are like by far best 2. And then for business, what's that guy that passed away too? The guy, what's his name? The real estate book. Am I being too subtle? Sam Zell.
Sam Zell. Yeah.
We're talking mobile home parks. I haven't read it in like 5 years, but he basically, for people know, he was considered one of the greatest real estate investors of all time. We talked about a little bit the last recession. He strategically sold. He had one of the largest office portfolios, sold it right before the crash. At the same time, he was doubling down. He's the largest mobile home park owner, Lifestyles Equity, and then also largest multifamily owner in the United States. But he still has been parceling off before he passed away some of his multifamily, keeping more of the Class A trophy properties, mainly in like the East Coast or West Coast, your area, kind of Aspen and some of the West Coast properties. But he doubled down. They want to acquire more parks. I know that was kind of their portfolio. But for business wisdom, yeah, he literally talks about being an oligopoly, not a monopoly, oligopoly, where you basically want to dominate your market.
That's funny. So yeah, I have that book. I bought it, but I haven't read it yet. I need to pick it up.
It's good.
And what was the book you said earlier? Something about cloth?
Oren Clough, Pitch Anything.
Oren Clough, Pitch. Oh,
and it's a book anything. You have to read like 6 times. So like the first time, because you literally have to change the way how you think and how you communicate. And I even use it now, like it helps me close like big high profile clients because it communicates on a level they understand and respect. And they don't look at you as a peer, they look at somebody like, okay, this person, for some reason I could resonate with him. And it's just a way, it's different conversation. It's not being polite. It's about owning his thesis is owning the frames, the first 10 seconds, who owns like you have a frame, somebody's going to win it, either the other person or you. And the frame is basically saying you have more power in a way that people make decisions based on respecting the power. The best way to describe it. But it's like very, just even like the call to actions, the way you respond to people. And once you get better at it, and it took me years. So like I did all his courses and everything because he has like high courses. It just works so much better when you communicate people and then people respond to you that would like clients that would be very hard to get will now respect you and respond to you like right away. Then rather than playing games, and they'll respect your time too. I think it's the most transformational book I ever read for sure. Warren Clough.
Cool. I'll have to pick it up. All right. Next question is, I've lost my spot. There we are. It's about the U.S. It's a big place. A lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Texas, which you mentioned. And then living in Miami. I think Miami is a growth market, even though Mayor Francis is just is finishing a second term. But Miami to live, and then Texas, anywhere. Like I said, I alluded to before, there's 8-10 the top biggest markets. Anywhere in Texas right now, it seems like a high growth market. You want to go where growth is at, no state income tax, and a pro-business state.
Narrow down to one city in Texas that you like the most.
Well, we'll go with our market then. New Braunfels.
Yeah, and that's northeast San Antonio.
In between,
right?
It's basically directly in between San Antonio and Austin.
Yeah, I almost bought a outdoor storage. I mean, it was literally just like a guy's house, and he was storing shit out there, but we could not get that deal done. And I look back at it now, and I just wish I would have bought it at his price, because now it's like it's through the roof. So, oh well.
The market's changed in the last year because all the news is happening like right now, and all the development's happening now. So,
yeah. All right. Next question is about lessons learned. Not every deal we get into goes the way we expect it. In fact, pretty much every single time something's going to go wrong, and that's when we get to learn a lesson. So what was a deal that went a little bit sideways for you? And then what was the lesson you pulled from it? Hey guys, quick break from the show. If you've listened to this podcast before, you know we are always talking about how important it is to have the right mentors and partners in real estate, which is exactly why I've opened up the Real Estate Investing Club online community. It's a place for active investors to learn, collaborate, and get real deals done together. And right now, it is 100% free to join. We host weekly calls where we review deals, talk strategy, and share tactics. Just click the link in the description below and come join us.
Yeah, I could just say in general thesis here too. The main thing is, because people reach out either to invest or sometimes people want to do one-off deals, is make sure that they follow through with the action they say. Because a lot of people reach out and they're just, framing themselves as somebody that's going to invest or is going to do something big, and seeing what their actions dictate. They're going to show up in the call. They're going to say, hey, they're going to move fast. They're going to take high velocity decision making and high fast action. The people that kind of put stuff off and like you have to like drag the feet along, those are by far the worst and the hardest deals to get done. It's like that's the ones that kills the deal. It's kind of like when you have a lawyer that has to do the redlining for no reason, but he wants to act like he's getting paid. You want to like get people that move fast. If you have the other person, your investor, working fast, or the other person that's selling the property is moving fast, they're going to help execute where other people lag off. And that's the thing, is just finding those right pieces. And I'd rather have one partner deal like that than having like 3 nightmare deals where the people are like, oh yeah, we'll take care of it next week. And then the time kills deals, more layers kills deals. And so finding the right people.
It is, it's crazy how true that is, that just that phrase, time kills all deals. It's 100% true. If somebody's dragging their feet, I almost just stop thinking about the deal. Cause I'm like, I mean, if you're not taking action, then I'm not even thinking about it. It's not in my head because you need to have, people need to be taking decisive action every single step along the line, or else the deal is going to fall through. A million things can happen to kill a deal. So, yeah. All right. Next question. This is a new question we've been asking because I am a huge proponent of AI. I've been trying to implement it in as many places as I responsibly can in my business. So if you use AI, well, first, do you use AI in your business? And if so, how do you do it? And how can you suggest people use it in their own?
Well, I'll give it a little unconventional way, but yeah, the first when AI came out, I was like, Chad, I'm like, oh, this isn't that great. It's just hyped up version because I'm real big in tech and online. And I was like, oh, this isn't that great. The answer is it's not even updating. And then now this year, I would say probably like March or April this year, I became obsessed with AI. I was like, okay, now it's rapidly advancing. It's getting a lot smarter. The data is like incredible. But I do it where I use chat mainly and Gronk a little bit, but I train it. So like on the back end of it, say, hey, question everything I say, do deep research. Also, just because I say something, don't always agree. We're both trying to strive for correct answers. I got that from somewhere like on X, because I follow a lot of VC guys. And then I always ask it 2 or 3 times because the first answer, because it doesn't want to, it'll save some of the memory of what you've asked before. But if you ask it 2 or 3 times, okay, based on this, on a scale of 1 to 10, is this the correct way? Or is there any other ways we could look at this? So I don't just automatically take the first answer. Most everyone just like, oh, this is great. And then the better the question you answer, the better the data you input it, and the more you question it, and then you give it real world data back, the better the results are going to be. And that's a lot of people don't think about that. They just like instantly take whatever it gives out, throws out. That way you're going to train your chat GP. And at the same time, for just like we're talking business, but I think health optimization this last year, I got really back into like fitness, like when I was like at high school in my early 30s. I'm 46 now, but I lost 42 pounds, and the people are like, I'm down to like 7.5%, 8% body fat. And I literally asked, and people are like, how did you do it? How'd you do it? I'm like, I literally take a picture of my food every day. I say, what are the macros? What should I do? I take a picture of myself and I say, okay, for tomorrow, here's what my workout is. Here's what I'm doing. What should I eat? How many calories? And so like, it says, okay, this day you have to do 1,700 calories, 210 grams of protein. I'm like 148 for context.
Nice.
So like 1.3 protein or 1.4 protein per body weight. And it's like this many carbs, this much water, stop at this time. It's literally precise. And then you go back next day, okay, and then I use my Whoop band. So I give it more data.
Yeah.
Some of the food. And it just gives you like, I think this really it goes back to business because now I have more energy. I wake up, get on my workout, I'm done by like 8:30 in the morning, and I'm like really amped up naturally, organically. Like I don't even have to drink caffeine just from that, getting that workout in, and then having better recovery so I can make better decisions. I have less brain fog, and it just makes my business operate at a higher level. So I think just using chat first by providing the best data, question it, and then second, have it like use it for other things in your life, not just like the business component, like what makes your business better, put it with the health benefits, your food benefits, stuff like that.
Yeah, I have not heard people use it as a personal trainer or nutrition. And that's genius. I love it. Yeah, it makes a lot of sense. It is crazy how quickly it's been developing over the past 6-8 months. Just yesterday, we're doing a campaign, and this retail spot came into our pipeline. I don't buy retail. I don't know how to underwrite retail, but I was just like, well, we should just give them an offer. And so I just threw the address. I literally just threw the address into Perplexity, and I said, underwrite this deal. And I had a different criteria, and then give me what you think would be a good offer price for a killer deal. And what it spit out it just blew my mind. I was like, just based on the address, it got all of that information and underwrote it based on, pro forma numbers for what is expected for that type of asset. This was actually a car dealership.
Nice.
And I don't know. I was just blown away at how accurate it was. So it's crazy.
Use that for data. Quick to intrude. So like when I travel, I take a picture of the Airbnb. I'm like, what's the restaurant? What's the gyms around here? But if you're doing for the real estate side, you could say, okay, what's a geo target around here? What's the demographic? What's the job? Is that market growth? So you could get better data to help you make a decision on acquiring a property or not. Like, okay, is there market growth? Is there trends? Are there stable jobs? Ask those questions, give it the geotag and say, would this or this property be better? And give me reasons why, yes or no, or what's high probability of this better being better long-term asset, which location? Stuff like that is what I like ask ChatGPT. So it's a little more gold nugget for you.
Yeah. It's pretty cool how good it is these days. All right. Well, that does wrap it up. It leads us to our very last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a 2-parter. Where can they find you? And then what can they expect when they reach out?
Oh yeah, cool. So Jonathan, the number one, LinkedIn. That's usually the easiest. DM me on there, or Midwest Park Capital, or Land Hyphen Play for the commercial real estate investment or development. Either one of those. And yeah, we're pretty strict. We're selective, I should say, on like who we take on. Usually 250 a minimum investor, credited obviously. But like yeah, if somebody that's looking to move into our typical investors are pretty seasoned. Like a lot of our investors are already other real estate funds or real estate executives. we get with those clients way more easier investors than like a typical, hey, I'm going to want to put 50K in because they like how we do it. They like the team. So, but yeah, like if you want to find out information on those two websites or just want to connect, LinkedIn.
Cool. Sounds good. I will put those links in the show notes. So if y'all want to reach out, all you got to do is click the little more in the description. It's going to pull down that full description. In there, you can find Jonathan's links.
Awesome.
And with that wraps it up. So thanks a lot for hopping on the show.
Thanks for having me on.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe, at therealestateinvestingclub.com. If you guys want to support the show, just leave us a review or a comment or anything like that. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.